Yo, what's going on, boys? It's Charlie here with another video, and we're gonna go over the trades that popped up this week. So this is all trades from Trading Liquidity Supply and Demand. There's a couple setups this week, very dry, slow week. And again, every strategy is gonna have these points and times. It literally comes down to, can you handle the slow periods and not crash out and be taking a bunch of trades and blow your fundeds, or can you handle the slow periods and just chill? And just understand it's a slow period, focus on your craft, focus on other things, and pretty much just let the time roll past. That is exactly what I've been doing. That's how I've been able to skip trades, not only this week, but the 2 weeks before this as well. Especially last week. Last week was crazy, but this week was more of just a dry week. We didn't really have that much setups. We only had like maybe 3 or 4, if that, and that's it. Last week we had NFP. And usually with NFP, there's a lot of fake outs for some odd reason. I can't explain it, but at least for my strategy, seems to be a lot of fake outs that week. So you have to be really picky. And I was really picky. I didn't take a single trade. And this week I didn't take a single trade either. So it's kind of crazy, but I'll show you guys the trades. And it's crazy important to understand that you have to stay patient during these times because, gosh, I mean, last week you could have been down easily like 5-6%. This week we had another probably 3 or 4 trades you could have lost on, right? So now you're sitting there, you already have a funded blown, and I haven't even taken a single trade. So when winning days, when you're able to skip all of these losing periods and these losing days, and winning periods start coming back and around and trades start popping back up, you haven't been taking losses, so then you can just get straight back into the market. You know when to capitalize on the market, so that as soon as those winning days come back, you can just start getting paid. Or someone who doesn't know how to manage that type of stuff and doesn't understand the market on a deeper level, they think it's just normal liquidity supply and demand, which is not, then they're going to be taking all these losses, and then when winning days actually come back around, they can't really capitalize on them because those winners just make up their losses. And the same thing happens again. So you have to filter out all of these bad trades. And that's something I'm able to do with very deep market understanding and analysis that's not taught in the liquidity supply and demand space. But I'll show you guys the trades. I have about 4 or 5 of them. I'll pull up. There was one good trade, actually. I lied. There was one good trade on Monday. I wasn't able to take it because Sunday was Super Bowl and Monday I was cooked. So it happened really early in the morning. Your entry was, a lot of people didn't even take it for some reason. There was, I think, like 1 or 2 people that actually even took the trade, which I think it looked like an amazing trade. I don't know why you'd skip it, but I will pull that up and I will show you guys. So I'll see you on the charts. All right, boys, here we are. We got the Valentine's Day sale. All right, so hopping on NAS first. We're gonna go over a position that was on Monday. So Tuesday, Monday, right here. Okay, so let's go over this position. There was a long position within here. Let's talk about it. So right here, we're reacting actually from a fair value gap and imbalance in the higher time frames. Okay, so we expect price to have a reaction from it, right? And it does. And what do we have here? Well, we have our demand zone with, oh wait, no, this one isn't it. Where is this it? Yeah, this is it. Going crazy, boys. All right, so this is your demand zone. Okay, here's your demand zone. Liquidity, not bad, right? The liquidity isn't really something that I'm worried about. The liquidity looks fine in this scenario. I like kind of like the consolidation we have, and price comes down. The only problem with this is, yes, this is a valid demand zone by all means, and sometimes these do work out like this, but look at this zone and ask, where did the real buying pressure come in? Well, the real buying pressure actually came in a lot lower than where this wick tapped into. Okay, right? All it is this is just a rejection point for the top of this wick right here, right? Most of our buying pressure actually came in down here. We pushed the whole way up, and then next candle just opened and we just continued pushing up, right? So if there's any type of demand, it's going to be at least on this bottom area, and that is why you can still trade zones with big, or you can still trade demand zones that are big, but we want to see ideally is a nice wick into the zone, coming at least on this lower wick, right, where buying pressure actually stepped in, and then a nice reaction from it, right? Whereas this, I better go over this real quick. If anyone's new that's watching this, my strategy is just pure liquidity supply and demand. So when markets are trending like this, okay, we're putting in higher highs and higher lows, we look for a liquidity sweep, which is going to be an internal level of liquidity followed by taking out its previous highs to continue the trend, right? And when price retraces, we want to take an internal level of liquidity. And when we do that, we want to see a nice reaction off of like a demand zone, for example. And then we have entry models that show if that reaction is good. If we get buying pressure that's coming in that area, that is good to take a long position because we just took out sell stops right here and we just reacted from an area of interest to our left. So that is the core understanding of my strategy, right? And you can kind of see that here, but not all trades are the same level as each other, I should say, right? So we have this play out, but just look how big that demand zone is. Look how little kind of that wick is. We just tapped into the zone. We just barely closed bullish. And then our next candle just runs right through it, okay? So I shouldn't say it's the level of liquidity that's throwing me off. It's definitely not the liquidity. The liquidity is actually pretty fine on this trade. It's that really it's just this demand zone, to be honest with you. I mean, if we're trending super, super hard, then maybe it's something I'd look to take. But we have to be careful with this. We know higher time frame, we're still bullish and stuff. So we know that, hey, oh shit, hold up. We know that this is just a little retracement here, and then we're gonna continue up, right? So we know this is gonna eventually flip. We just don't know exactly where. So when we're not pretty much all stars aligned, would you really want to take this trade and you know, when we didn't even tap into the bottom half of the zone, we just wicked into it and barely closed bullish? Well, no, we'd want to see price tap into this really, really hard and get rejected super hard, showing that buying pressure is actually coming in at that point, right? And that didn't happen. So then price just trickled down and we targeted lower levels right here. And we swept those and then we continued up. So that is why I skipped that one. I know a lot of people in the space took that trade. That one ended up losing. So that is that trade. I don't think there's anything else on this day. That was Monday. So we're gonna jump around here, not exactly in order, but we have gold next. We're gonna go over, and this was on Thursday. Right here, there's two setups you could have taken. So again, two setups you could have lost on. Now this comes down to purely trading chop, to be honest with you. So let's look here. Let's act like none of this over here exists, okay? Price is just right here. Let's actually just go into replay mode. Let's look, okay? What's price doing? Well, price is pretty consolatory, okay? You can sit here and say we're bullish, which is true, right? We are putting in higher highs, higher lows, you know, higher highs, all this, right? It is bullish, but internally, what are we doing here? We're kind of consolidating. So we don't know, we're not in a super trending bullish market, right? So price could take out this liquidity and react from this zone, of course, but it could also take liquidity and have a reaction under here and move up, right? Price could come down here and react. We really don't know because price isn't that clear right now with all this drop. So why I deleted that price action to the right is showing you that there was a trade over here with a lot more sideways movement that's actually generated than only this amount right here, because price kept just consolidating the whole way over here. So you only have this amount of sideways movement, which is still a good bit of sideways movement that I really don't like to see, but internally we were still taking out highs, okay? We're still taking out highs, but there's something I talk about in a private community that I'm working on that I'm not gonna put on this YouTube video, but there's a literal algorithmic way to know within this consolidation right here what price is most likely, not 100% of the time because price is never 100%, but what side price is most likely to break out of, okay? And I know that sounds crazy, but it all has to do with these liquidity levels here at the highs and lows, okay? And knowing that, I expected price to have a higher chance to break to the downside, okay? This trade right here was technically fine, right? We have a level of liquidity. We have price taking out highs. Then we have this high, price took out its own high again, right? We have price taking out highs. Well, we got this reaction. I'm not doing anything except waiting for a candle close, okay? And there was, I think it was this candle, there was a potential flip entry. It flipped bullish for a second and then it continued down if you really wanted to take that. This 9 chances out of 10 for I think mostly everyone is just a straight up invalid trade because we had this rejection, cool, while we're waiting for a candle close, a bullish candle close to have our confirmation to take this trade. We never even got that in the first place. So the really only possible way you could enter this trade was maybe through a flip and that's it. So that is the only reason I'm kind of going over this trade. It really wasn't that easy to enter for everyone, I think. But I know there was some people heard apparently that did take this trade and they just got instantly stopped out. So that's the only reason I'm kind of going over it real quick. But that trade's a lot easier to skip kind of rather than this trade, because if you would have been just patient and waited for a candle close, then this trade would have closed inside the zone and it would have been invalid to take. So that was an easy one to skip. Again, there's really no reason to take a flip right there regardless. So that was that trade. And then let's fast forward to this trade right here. So, where is this? Okay, right here. So, draw this over. All right, so we have a demand here, okay? Pretty much kind of the same thing here that's happening to the left, right? We're still consistently taking out highs to the left, okay? Still consistently taking out highs to the left. And price has this level of liquidity, okay? And yes, this one candle liquidity, but that really doesn't mean anything right here. The liquidity is still very nice. It's not one candle as in a little tiny retracement like that, and then a continuation up. It's a big candle of liquidity. It's a big retracement, big push up, right? There's gonna be stop orders underneath these lows. So, 1 second, boys. Okay, now let's look. So, we have this level of liquidity, price comes down, takes it, right? And we have our actual entry candle. You could enter this trade right here. You could enter long position right here, put your stop loss right there, and TP up here, okay? Well, this purely comes down to some understanding of price on a deeper level, but this also comes down to your trading sideways movement. Is this the smartest thing you could do right now? Realistically, we have CPI tomorrow. This would have been Thursday, we have CPI today. Is this the smartest trade to take? Not really. Price is not trending hard. We have massive news events tomorrow. Price is gonna consolidate or just keep taking out liquidity in both on the highs and lows. So what does price do? Oh gosh. Stops you out. Price did end up continuing falling really hard. I don't know if there was some type of news that came out or something fundamentally that came out, but it did drop really, really hard after that. But that is why I skipped that trade, was purely because I did expect price to move to the downside, but I also just don't like trading this, whatever this is. I don't like trading that because a lot of times we're just taking out constant levels of liquidity at highs and lows, and a lot of times that's your stop loss. So that's how I've avoided those two trades. Again, this was a lot more able to enter rather than this trade because you really would have had to been, super aggressive entry with that. I don't know if a lot of people even actually took that trade, but this right here had an actual entry, right? We took liquidity, we had a candle close. This gave the full head to toe entry, and I just purely skipped it and it lost. So again, this is what I'm talking about skipping all of these trades. And you're able to just sit on your hands pretty much all week like I did. So skip those two positions. So let's look what else we have here. So apparently there was a trade on GJ. I don't know if Sky you're watching this, but this is what I didn't even know. Apparently there was set up on the 10th on GJ. There was, oh yeah, okay, this was this trade. So this one did end up winning, but no one's actually trading JPY right now because of the intervention. And this is just a horrible trade regardless. It doesn't really follow with our strategy at all. This is just kind of pure supply and demand. So this would have been one of those trades that like you would take even though it looks absolutely horrible, but then it would hit. So then you'd be like, oh, cool. Like it's you know, perfectly fine to take trades that are just bad quality like this. And then you start actually doing that and you realize a lot more of them lose than actually win. That's a terrible place to be in. But right here, literally this level of liquidity doesn't even really have an effect. I'm not even gonna lie to you guys. That's like nothing, okay? On top of that, if there was any level of liquidity right here, price just swept it and tried to push lower and we failed, okay? And we came up one more time and then just tapped into this little bullish candle. It's barely even bullish, the supply zone, and then we just continued down. This was just a horrible trade. Price is just very low volume, you can just tell on GJ. It's just kind of flowing with the state, I guess. And yeah, this would just be a standard trade you'd skip. I don't think anyone's really trading JPY pairs anyways right now because of the intervention. So that's pretty much it on that. So I wasn't even looking at this at all. So let's look at, what else do I have here? We have CJ Long. So these are on the 30-minute time frame, okay? 30-minute time frame. So this was a fine setup to take actually, if you were trading Asia session. This happened for me at 12:30, okay? Or yeah, 12:30. So your initial entry would be right here, okay? If you originally got in this trade. Now look at CJ right now. There's really nothing to complain about. Price is moving bullish. Price retraced, nice and clean. We had this major low right here. Price swept it. We had this demand where originally it was accumulation and buyers stepped in and price pushed up with this nice level of liquidity right in front of it. Price stopped out all of these orders and we found support right here showing continuation, right? Original trade idea, that would be a good trade to take. Now, that was at 12:30 for me, right? By the time I woke up, price was right around here, okay? And usually I'm fine with taking some retracement trades, right? If a trade happened on the 30-minute time frame, like an hour before I woke up, and we have a little push up, and we got like, see like this wick right here, I'd be fine with entering there, right? Yes, I didn't get the original entry, but if it's the exact same spot and there's still the reason to take the trade, it's on a 30-minute time frame, it's more of a swing trade, I can still enter there. There's no issue with that at all. The main thing is understanding, are you entering on a trade that's about to lose, okay? So this is what happened for me personally. I looked at this trade and I didn't take this trade, but price was coming down and I was like, all right, cool, I could get in on this re-entry, but I'm not the type of guy to use patterns, okay, by any means. But if you guys are familiar with a head and shoulders pattern, just kind of feel like price is pushing up, we took liquidity, right? And if we wanted to continue up, we would continue up, right? Price kind of reacted off this and filled in this imbalance, and now price is starting to fail. And price is coming down. And seeing that play out like that, how price was just purely, we took liquidity, right? This was a fine trade to take, but after retracing that hard, you're sitting there and you're looking at that and you're like, well, we don't really have a reason to retrace unless we're gonna take out these lows, right? There's really no reason internally for us to be retracing right now. We just respected that imbalance. Now we're coming down. Where are we coming down to? Probably these lows. And I teach reasons on why specifically and how to know if price is gonna be targeting these lows. So me personally, I was like, I'm not gonna enter on this. I'm just gonna let this one go. And we tapped into our original entry. We had a little reaction, right? Price consolidated for another probably hour and a half, and then price just ended up going straight to stop loss and targeted these lows. And CJ's actually been bearish since. So that is a very good trade on my part that I skipped out on. Original trade idea, there's really nothing wrong with it, to be honest with you guys. And I use TradeSafe like for my fundamentals as well. And at this point in time, it was actually starting to lean a little more bearish than bullish. So I used that on top of my technical analysis, and I was like, price may actually move down, so I'm just gonna let it go. And that's what happened. Price moved down. So I, lucked out on, I wouldn't say lucked out, I used actual analysis on that one. But again, if this setup would have happened within my entry, or within my time frame, I would have actually took an entry on this trade, because originally it was good, right? But the thought process behind this trade is we should be taking this level of liquidity and price should be moving up, right? The fact that price moves up and we start falling, and we're probably going to continue down and target these lows, I did not want to get in there. So I skipped out on that trade. And then Euro USD in the 5-minute, we had a trade today. Now this is exactly why I took off Euro USD, because it's a horrible pair. But I'm going to go on this, I'm going to do the technical analysis on a deeper level on within my private Discord that I'm working on, because there's a clear reason that this price actually lost. Let's give you guys a little hint, but nah, that's not it. There's actually there's a lot deeper level. So this liquidity zone, or wait, no, it was this supply zone. This supply zone, some people took, okay, for, maybe it was, no, okay, I lied. I'm sorry, boys. It was this zone right here. Supply zone, okay, as this level of liquidity. Okay, that level of liquidity, that supply zone, okay, price came up, swept our level of liquidity. EU looks bearish right now. Why did this trade not win? Well, I don't want to go into too much detail, but take a look at, I'm going to try to give you guys a rough understanding. This is kind of why I hate EU. When EU is on its way down, it prints non-stop supply and demand zones. It has a supply zone here, a supply zone here, has a supply zone here. It had another supply zone here that did get invalidated, right? So it has all these supply zones coming down. You don't really know where price is going to react from. So you could take a perfectly valid entry right here and you get wicked out, okay? And then you could take a perfectly valid entry here with this supply zone, with this level of liquidity. What happens? You enter on this bearish candle close and price comes up and wicks you out. And then price starts getting some bearish movement after reacting off of this supply right here. There's a lot of supplies, and EU has a very specific way of non-stop targeting liquidity higher. I don't want to go into too much topic, but I don't even trade this pair. I just know that this was a setup that happened this morning, so I wanted to go over it. But again, that's kind of a reason why I don't really like trading Euro USD. That's why I took it away, because of things like this, right? Perfectly valid trade, and it's just, there's so much liquidity on the way down. There's so much supply zones on the way down that price just keeps faking you out. So that's why I skipped that one. Now let's get into the only valid trade to take. There's literally no valid trades to take, in my opinion, this week, except one. There's one trade on GN in 30-minute time frame that I did not mind. Right here, let's look at what GN's doing right now. It's price bearish, right? And trend plays a very important role on this 30-minute time frame. Price is bearish, right? We know this, okay? People say they didn't like the structure here. I really don't understand why you wouldn't, okay? Price is moving down. We're taking out lows. What do we have here? We have liquidity that has not been taken out. We have more liquidity that has not been taken out. We have more liquidity generated, okay? So we have this big conglomerate pretty much of all these orders sitting all above these highs right here, right? More or less kind of consolidation here. And price pushes up, takes out your most recent liquidity, which is going to be these highs right here, right? But most importantly, all of these levels of liquidity right here. Price takes them out. We get our rejection. Short position on that first candle close, which would be right there, and your stop loss right above the wick. And you'd be targeting this low right here because price is bearish. So what happens? Price hits that low for almost a 1 to 5, and that's a perfectly valid trade to take. For me, this happened at 6 a.m., which normally my trading session I would be up, but I was really up late the night before, so I wasn't able to really get to the markets really early on Monday. And plus, it was a no news Monday, so NAS and gold and stuff kind of had a lot of low volume. So yeah, I wasn't here really early in the trading session, but still a fine trade to take. And no one really took this for some reason. I'm not too sure. I know a couple people took this, but I think this looks like a great trade. I really don't see an issue with it. Maybe it's a bit intuition, I don't know. But I mean, for me personally, I don't see an issue with this trade. Everything's kind of aligned for it. There's nothing that's flashing red saying to not take this trade. So that, if anything, that was pretty much the only valid setup this week. And that's it. No one really even took that setup. I'm not gonna lie to you guys. So you go to the 5 minute, again, I skipped out on so many losses again. It's crazy, but yeah, I'm gonna pull my camera up real quick here again. But yeah, that's pretty much it for this week. There was 4 or 5 positions that I skipped out on. They all lost. I know a lot of people's actually taking positions this week, and I've been just sitting here. I've been just sitting here working on other stuff, working on my community. Even me, still learning. I've been nonstop backtesting, nonstop hindsight trading, all of this stuff, nonstop looking over my data. And yeah, that's literally it. And that's the way you really better yourself trading, rather than sitting here trying to take all these stupid bad positions and you nonstop lose, and then you start getting in your head. Whereas there's people like me that just sit and show out and understand that it's a dry period. So I'm gonna keep perfecting my craft, and I'm gonna keep working on stuff. While these other people are just nonstop trading and nonstop losing, and trying to force all these trades, when you have to understand we're just in a slow period. Every single trading strategy has this. You have to understand when it's a slow period, right? When it's a losing streak, when it's a winning streak, when there's time to put risk on and take more positions. You have to understand these things, and you only understand them by market experience and lots of backtesting and data, okay? TradeSafe literally helps you see all this data, right? Like I literally imported NQ on 2024, 2025, 2023, all these years of data, and I can sit here and look at them and literally see the trade expectancy. I can see how many trades were expected per day. I can see the win rate, I can see the P&L, I can see all these other things, right? But you can literally see how often to expect these trades and understand that there is actual slow weeks within here. And if you're not able to see that data, then your mind's gonna go crazy when no trades actually pop up. That's why it's very important to use stuff like this and to backtest and get this type of data. I'll literally show you guys. I'll pull it up right now. Okay, guys, like this is literally my account. I've not taken a trade in a while, okay? This is literally, and it's still a green account, just sitting here waiting for these conditions to pass so then I can start hammering positions again. While everyone else is losing, I've been just chilling here green. And these aren't even, this is just one trade noted down, right? Because I'm actually switching from Top Step to a different prop firm after they banned gold. I would have had another trade locked in here. I don't know what's going on with them, but that's beside the point, right? I can sit here and literally look at, and I still have to add all my journals, right? Right now I have them all in a spreadsheet, Google spreadsheet. I literally click add, and I add my Google spreadsheet into it, and it gives me all this data with all from my back testing. And I can sit here and see the trade expectancy. I can see the date and see how often we expect trades, right? I can see, hey, look at this. What is that? That is a losing streak. So when that happens, live markets, and instead of actually going insane, understand there's losing streaks. Understand that, hey, this was almost an 8 trade long losing streak. I can see this data because of this. So when you are literally flipping out live markets and you're losing all these trades and you don't know why, you can come back to this and see. You can also see your winning streaks. How many trades was here, right? This was all in the span of pretty much a month. February 1st to March 1st. All of these trades just smacked. 4 bands, 4 bands, 4 bands, 4 bands, 4 bands. This one was closed early because of news. Or no, we took a win and a loss. So 3 bands, 4 bands, 4 bands, 4 bands, just back to back to back to back. And you can literally come down here and see your weekly P&L. You can see what days like perform the best. You can see all of this stuff. You can see your win rate. So that if you don't think you're hitting enough trades and you don't understand why, you can come here and see the actual data. Anyone telling, by the way, I aim for 1 to 4s. That's a 42% win rate. Anyone tells you that 1 to 4 should be getting 75 to 80% win rate, all of these crazy numbers, they're straight lying to you. A lot of these people just do that for clickbait, thumbnails, and they use the data from a very cherry-picked month that they know performed good, and they will say, oh guys, look, 7 trades won and 1 loss. We have a 90% win rate targeting 1 to 4s. My strategy is insane. Join my mentorship. That's all everyone's doing, okay? Like, you guys should be smart enough and have enough brain cells to see that and be like, these guys are actually retarded. Like, these guys are genuinely retarded. If it was that easy, everyone would be doing it. It's not. 40% win rate on 1 to 4s is very profitable. There's no reason that this isn't profitable at all. And you guys can see literally the equity curve play out. And this is just on NQ in 2 years on 1 time frame. I trade multiple years and I trade multiple time frames. So I just want to show you guys that real quick, that you have to understand that we are in a dry period. You realistically have to understand that we are in a dry period. You can literally even see that with these and look at the dates between trades and understand where there's actual dry periods at, right? Like, it's crazy. But that's why it's very important to have data like this. If you guys want to use this, you can use code CHARNEY. It gets you 10% off. I have it up here at the top. If you're interested, it gets you 10% off your first month. But this is literally how I'm able to see data, and I'm able to understand the period that we're in. I'm able to sit there and be like, oh, cool, it's just a dry period like we had, 4 months ago, like we had a year ago, like we had a year and a half ago, and you can look at all these other pairs and see when trades came up, when it was a dry period, and back and forth on all these different pairs and all these different times. If you don't have this data, you're literally asking to get cooked in these markets. I don't know why you wouldn't be using data like this. These softwares literally exist now, and these didn't exist a couple years ago. They genuinely didn't really exist a couple years ago. You have data at your hands to literally see and succeed in this trading stuff when 1% actually truly make it. You have this stuff at your hands. It's only getting easier and easier to not use stuff like this and actually understand the type of markets you're in. This is what separates me from sitting here understanding that we have slow periods, understanding that this profit was still strategy, or this strategy is still profitable, and all these other people don't have this data. So they're just sitting there, they're trying to look for trades because they feel like they're not doing anything, and they lose, and then they're like, oh, this strategy is so bad. No, this strategy is actually amazing. This strategy is literally better than a lot of other strategies out there, if not the same. All these other strategies have slow, dry periods. All these other strategies, people that's been trading them for a long time, they know when to actually put risk on and be looking for trades, and they know when there's a dry period and to stay out. That's literally what separates them. Okay, if it was just a matter of looking for this on your chart every single day and look for a liquidity sweep and tap into a demand and entry candle, everyone would be rich. It doesn't work that way, guys. Use your mind, use your data to your advantage, and you have to study these markets at a deeper level. But for me personally, I've been chilling. This has been great. I haven't traded in 2 weeks, and everyone's losing. I know actually a lot of big people in the space have been consistently losing actually the last probably since the start of February. So I don't know if it's something with other strategies. These guys, people or people that are trading other strategies as well. So I really don't know if they're having it seems like they're having a rough time as well, which, I mean, I'm not even really having a rough time. I'm just not trading. I haven't taken any losses. So yeah, these conditions will 100% pass. It's just kind of a slow period. And again, people that truly know how to trade and aren't forcing anything, these are fine times to live in. These are amazing times. I'm sitting here working on my craft every single day, backtesting, hindsight trading, getting all this data, and I'm just practicing while everyone else is losing, and it's crazy. And then when good trades actually pop up, they're just trying to make back their losses that they made, and I'm able to skip there and just add more wins because I never took all of these stupid losses in the first place. And it's not taught that way. I don't know why it's not taught that way with liquidity supply and demand. I really don't. There's a lot of guru type people in this space. It's horrible. It's really horrible. So that's why I'm kind of working on a private community to teach this stuff on a deeper level, and I don't want to put it on YouTube for free here. I don't. You think I put in all this work to just put you guys on and give it for free? Absolutely not. 100% not. Anyone that actually put in the work for this, that's watching this, they know that. They're not stupid. This stuff takes work. So I know I rambled a lot, even though this is just kind of a weekly recap, but that's pretty much it for this one, boys. Hope you enjoyed that. I hope you got taught something. Hopefully you guys kind of stayed out of the market this week. There really wasn't that much setups that even popped up regardless. But yeah, that's pretty much it for this one, and I will see you boys in the next one. Peace.